a savvy car consumer.
Okay, Stan, what's going on?
Jiggy Jaguar.
It is the world-famous Jiggy Jaguar show, coast to coast and motor to motor. All over the World Wide Web and on 50-plus stations across the U.S. and Canada. It is a fun day. Thanks for tuning in to the big broadcast from the Transmedia Worldwide Studios in the great Salt City of Atchison, Kansas. Monday through Friday, 2 to 5 Central, 3 to 6 Eastern, 12 to 3 Pacific. 24/7 at JiggyJaguar.com. If you miss anything that we're doing here today, you can catch us over there as soon as we get off the air. 24/7 at JiggyJaguar.com. We've got the housing guru, Gail Allen. She's going to be with us here in a few moments. She's well known for doing all sorts of different things, but one of the things she's well known for is dispensing advice for real estate owners. Her popular internet radio program is heard weekly on nuviberadio.com. That's nuviberadio.com. Gail Allen's House Talk is available Saturday at 10 a.m. Eastern Standard Time. She's also the author of Making Good Sense, a Loan Modification Guide. And I welcome to the big broadcast, Gail Allen. How are you?
I'm well, and how are you doing? And thank you for having me today.
Now, you have a great background in dispensing advice for real estate owners. Talk to us about how you got started in this incredible field.
Well, actually, I started as a realtor, and then I had the good fortune of traveling on the road with my cousin, who was an original Shirelle, and I was able to speak with people like Leslie Gore, Gene Pitney, the Drifters, and we would talk about real estate. Everyone loved real estate. And so I decided, well, you know what, I think maybe I want to just put up my dancing shoes and go into real estate. And what happened is we became very successful. I opened up a mortgage company, and until 2007, everything was rosy here in America. And then, of course, the markets imploded. And it did start with Countrywide. It did start with the subprime and the non-prime loans. And suddenly, my business phone began to become less busy, and my personal phone, my private line, started becoming very busy with callers asking my help with loan modifications. Old clients, friends, people in the neighborhood that heard that I was able to help them with securing a loan modification. And suddenly everything was upside down in America. What had a value of $600,000 or $700,000 began to discount and now has a value of, let's say, 50% less. And so I decided that maybe what should happen here in the United States of America is that homeowners should not have to pay through the nose for loan modification. You shouldn't have to pay an expensive, sophisticated loan modification agency $4,000 or $5,000 just to keep your home. And don't forget, when you keep your home, what you're doing is you're paying taxes. You're paying real estate taxes, state taxes. You're also patronizing merchants. You're making it so possible for public utility companies to remain profitable. So you stabilize and you keep neighborhoods intact when you keep home ownership in position. And it's important that every American that is facing a hardship modifies his or her mortgage.
We've got a great guest with us today. Gail Allen joins us. She's well known for dispensing advice for real estate owners. She has a tremendous radio broadcast. It's called House Talk. It's available on nuviberadio.com, nuviberadio.com. Saturday, 10 a.m. Eastern Standard, and she's also the author of Making Good Sense, a Loan Modification Guide. Now, talk to me about the book. This is an incredible read. You make the complex understandable. Break this down for me. Talk to me about Making Good Sense.
Well, first of all, when you look at a loan modification application or request form from your lender. Usually it's something called the RMA. And the RMA is the form that's sent out from, let's say, the HAMP program. It seems to be easy to follow, but then again, it has mathematical questions that seemingly are directing your attention to your problem and not really allowing you to explain how you can overcome your situation should your loan be modified. Let me give you an example. Say, for example, if you have tenants, you may live in a two-family home. If you're receiving $1,200 or $1,000 rental income, you may put that down as income along with your salary. But guess what? You will only receive sometimes as little as 90 or 75% of that income because the banks, the lender, will factor in a discount. That is a vacancy factor. So what we do with the loan modification guide, the Making Good Sense book, is we break it down. We let the homeowner know exactly what's being asked of him and why that question is being asked and why that question must be answered earnestly. You cannot overstate your income. That's number one. You must, put down exactly what you're making. Another thing that you can't do is you don't want to overstate your debt because what happens is that you disqualify yourself. And we find that many homeowners do that. Also with this guide, the Making Good Sense, we talk about the different types of mortgages that were given to unsuspecting homeowners in 2004, 5, 6, and all the way up to 2007. And many homeowners, you would be surprised, they are not aware of the fact that they do have a subprime or non-prime loan. What do I mean by that? I've asked many homeowners, James, what type of mortgage program do you have? And they'll answer me, I believe I've got 5%. Is it fixed? I think maybe it's fixed. Oh, is it interest only or are you paying principal and interest? I think I'm paying both. They really don't know. So what we typically do is we ask that homeowner to grab the most recent mortgage statement, fax it over to us, and we'll analyze it. And usually, many times, they'll have a subprime loan, or they'll have an adjustable rate loan, or we'll know why they borrowed $200,000 and now they owe $235,000 because they have something called a negative AM loan, which means that your interest rate that you're paying may be 2.5% or 3%, but your fully indexed rate may be 7%. What does that mean? It means over a period of 3 to 4 years, that 5% difference that you have not been paying accumulates and becomes negative equity. And that's how a lot of homeowners in the United States find themselves upside down in their mortgage, aside from the fact that we are experiencing record-breaking depreciation annually. So this book enables the homeowner to look at his or her situation, look at his mortgage, and recognize the violations and the pitfalls, and it gives them a strong setting. It gives them a reason to approach their lender and say, listen, we are asking for a loan modification because we have an adjustable rate mortgage, or we have a negative AM mortgage, or we have a mortgage where we're only paying interest. And so for the last 5, 6, 7 years, James, some people have borrowed $300,000, $400,000 on their mortgage, and 5, 6, 7, 10 years later, they still owe the same amount that they borrowed from the bank because it's an interest-only loan.
We've got Gail Allen with us today, and we're also being joined by Frank Savalto from the New Media Journal. Frank, how are you, sir?
Mr. Jaguar.
We were talking here with Gail Allen about loan modifications. Also chatting here about her book that is out there. She's also available with her radio broadcast House Talk, which is available Saturdays 10:30 a.m. Eastern on nuviberadio.com. That's nuviberadio.com. We were talking a little bit about the housing mess and loan modifications and things. Frank, what have you been hearing in the housing market lately? I know that you stay with the news, but I know that housing seems to be in the news as well.
Well, I know there's some concern among the people who keep a pulse in Washington that we're starting to see a lot of the same tactics that we saw before the collapse. That we're starting to see, and not to the extent and the scale that low interest loans were put out there before, but we're seeing the same kind of thing starting to happen again, where people who really shouldn't qualify for loans are starting to qualify again, creating that whole risk atmosphere one more time. At least that's what's being bandied around in the political circles out there on the right side of the aisle.
Now, Gail, you do a lot of work in this area. Are you starting to see more of that as well?
Well, I just received email this morning. It's very interesting that Frank should say that. Basically stating that the subprime market is back. Now, that should be terrorizing to most homeowners or would-be homeowners, the people who are waiting to get into homeownership. Why? Because this is what caused the demise of the real estate market that we have right now. So what do we mean by subprime is back? Well, we mean basically FICO scores of 580. We also mean 2 and 3% down. Let's face it, if you don't put down much money, you really don't have much risk. What we call in the business, you really don't have much skin in the game if you're putting down 2 and 3%. Originally, years ago, FHA was considered to be a subprime mortgage. And now it really is, because now with FHA you put down 5%, and you're going to get an interest rate of perhaps 5 or 6%, but you're paying private mortgage insurance through the nose, which can make FHA unaffordable. So yes, the subprime market is back. I believe it, and it's a shame. It should never happen.
Now, Frank, what have you been seeing and hearing in regards to this? Gail is horrified by this, and she's in that world. As an outsider in the home mortgage industry and just reading the headlines, what have some of your sources been telling you, and what do they think about all this?
Well, she's absolutely spot on correct. I mean, when you have a manipulation of ability, and this is what social engineering is all about, whether it's in morality or whether it's in economics, whether it's in real estate or business. When you have an artificial atmosphere instilled, nothing good can come of it, because when someone is given a loan, and I'm just going to speak in layman's terms, and maybe she can back me up on this, when someone's giving a loan that they can't afford, the risk is higher that they're going to default. If they default, the taxpayers end up picking this one up in the forms of bank bailouts, in the form of the market problems that end up happening. I mean, basically, what happened just with the last collapse of the housing market was a realignment of wealth. People who fell behind on their mortgage payments due to the economy, and there was a lot of people, ended up losing their houses to the banks, and people who were actually getting Section 8 money were able to pick up houses for nothing. And people with grand amounts of money started buying up houses just to be able to have capital investment. So you had and I know people don't like to hear this word, but you had a giant redistribution of wealth that happened because the economy tanked due to the fact, in large part, because people who were getting home loans should never have gotten them in the first place.
Gail, follow up on that.
Well, I take somewhat a different side, Frank, when it comes to people who received home loans should have never gotten them in the first place. It's kind of like, blaming the victim, in the sense that the American taxpayer trust its government. And there was no one really watching the store. These documents that homeowners were asked to sign at the closing table were very misleading and quiet, very quiet about things such as, let's say, features such as the negative equity, negative amortization, the fact that you can get a 6-month LIBOR or 30-day LIBOR or an MTA. These products were designed to implode. They should never have been given to homeowners. These are very sophisticated financial programs that really should have stayed on Wall Street. They should have never entered the real estate home market, and they did.
Well, I think we also have to remember that during the Carter administration, moving all the way through to partially the Reagan administration, and then peaking again back in the Clinton administration, was a giant push for people to own homes. And they were making easy money available to a lot of people who ended up defaulting or using government money in order to be able to subsidize their home purchases. That can't be denied. So when we look at that,
be denied. No.
you know, when we look at that, we're seeing a social engineering that brings in fiscal irresponsibility. There's nothing wrong with renting. Heck, I rent now, and it's easier in this climate to be able to do that than have to worry about all the insurance and everything else. And we've owned homes. So, you know, when you look at the demise, yeah, we could say nobody was watching the store in Washington, D.C. I don't think I agree with the I trust the government thing. You know, there's a lot of nefarious stuff going on there, a lot of back padding and behind the back handshakes, and we're seeing that come to play just about every day. But you know, the people who enter into this, when you're looking for something that's easy money, red flags should be jamming up all over the place, because there is no free lunch. You can either afford the house or you can't afford the house, and people have to be fiscally responsible as individuals in going into that full force.
What about the responsibility of the American government to make sure that its people are employed? You know, doing the
no. There's nothing.
Outsourcing of jobs. It's as if employment was pulled from out under the American worker. And at the same time,
there is nothing.
We were thrown easy money. It was,
nothing.
I tell you, Frank, it was a magnificent setup for the type of implosion that we've seen in the real estate market. It indeed was premeditated.
I'm just curious. Where in the United States Constitution or any of the state constitution does it guarantee employment? It guarantees opportunity. It doesn't guarantee employment.
Again, okay. Let me ask you this. Let me pose this question to you. Would you prefer to have a country that will guarantee and make sure that your children's children have employment? Yes or no?
Well, I'm not going to answer yes or no, because that's a false flag question. I would rather have a free economy that created jobs instead of government interfering in the free market, taking away jobs because of regulation and quota.
Outsourcing of jobs. What we're having right now, the reason why, James, the real estate market cannot make a comeback is when you look down the pike, you look to your left and to your right, you see no job industry coming for the American people. Everyone's looking out for the banks. Everyone's looking out for corporations. Who's looking out for the American taxpayer? Even with loan modifications, it's costing your average American, when they go to an attorney or a very sophisticated, knowledgeable loan modification agency, anywhere from $2,500 to $6,500 for a loan modification. That is to try and keep the roof over their family's head. And what my company does is we don't do modifications for the homeowner. What we do is we guide the homeowner and we explain to the homeowner the questions and the answers that must be given in order to qualify for a loan modification.
Okay. We've got it's a spirited debate today. We've got Frank Sabalto with us today from the New Media Journal. We've also got Gail Allen with us today, and Gail is a great radio host over there at House Talk with Gail Allen, Saturdays 10:30 a.m. Eastern on newviberadio.com. That's nuviberadio.com. com. She also has a great book out there that we've been kind of chatting about. Modifying your home loan directly with your lender can save thousands of dollars as well. And Gail, share with us here a little bit about how someone would go through and professionally prepare their financial worksheet.
Okay. Well, first of all, let me just say this. Many homeowners are usually turned down. When they are turned down, it's usually because of an incomplete application, missing information, or missing signatures even on the tax returns.
Yeah.
If they're self-employed, usually the lender wants a profit and loss. And that profit and loss statement, James, must be justified. You've got to show bank statements. If you're receiving cash, they want to see some type of tracking. And so we help the homeowner with this information. We help the homeowner document their loan modification request file. We professionally prepare the financials. If it's a Fannie Mae or if it's a Freddie Mac, FHA, we go right to the lender's website and we pull down that particular financial form that must be completed. We help the homeowner collect the statements. And we make sure, this is very important, that the homeowner does indeed qualify for the loan modification. If they do not qualify, we let them know right away. And I think that's very important because once people realize that they do qualify, they can move forward in the spirit of knowing that they can definitely ask for a loan modification and qualify and receive one. If they do not qualify, there are other options. Obviously, a short sale may be one, which is something that we really don't do. What we do here with our company, the No FICO Score Group, that's the name of our company, is we help homeowners stay in their home, modify their loan with their lender. We speak to the homeowner and we get on the phone with the homeowner. So the homeowner is not pretty much left alone by himself in the wilderness, not knowing what to do.
Frank, do you think that if her services, if more people would have taken advantage of this back in the day, we wouldn't be in the issues we are with housing?
Absolutely. Absolutely. The service that she's providing is incredibly important. And I think I think the reason for that was something that she said in the very first statement that I heard her say, was that you've got incredibly complex financial tools out there that the banks are using, that the mortgage industry is using. Talking to laymen out there who may have real estate attorneys or may not have real estate attorneys. Everybody should have a real estate attorney if they're going in to make the biggest purchase of their life. And when you get in trouble, when you get into a tight spot, more people should be going to services like hers, because then you get somebody who knows what they're doing, who understands the intricacies of what the banks have tried to do, and it's somebody who fights on their side for them. Not a lot of things, no matter what the subject is today, have people that are actually willing to fight for them so that they can secure what is theirs or what they've enjoined into, so that they don't lose what could possibly be an entire life savings.
Now, we've got Gail Allen with us today here on the broadcast. We also are joined by our Thursday regular, Frank Savalto from the New Media Journal, and discussing the housing market here. Frank, what have you been hearing as it regards to interest rates and different rates on loans? What have you been seeing just in the news and from your various sources in the media about the housing market and lowering the interest rates on loans?
Well, it's starting to loosen up for a long time there, because people didn't understand what the Fed was going to be doing with their infusion of money and the quantitative easing. A lot of banks were sitting on money. They were sitting on capital waiting to see what was going to happen next. And you had the complications of some of the policies coming out of Washington, where industry and didn't know what was going on. So loans weren't happening there. We're starting to see light at the end of the tunnel. It's a drip, drip, drip sort of thing. There's no rush to be loaning money right now by the banks, but they're starting to loosen up a little bit, and that can only be a good thing.
Now, Gail, speak to that on your end of things. You're in this you're in this world helping lenders and helping folks get into homes and things. What are you seeing?
We were very excited yesterday when we heard that Mr. Bernanke decided to keep his hands, on the bond market. We like that because we know that interest rates will basically remain low, and that's what we need right now. I mean, if you want to just totally destroy the housing market, all you need to do is just raise interest rates, and the realtors will start sitting at home again and answering the phone from their living rooms as opposed to going into the office, because no one will be able to qualify. They will not be interested in paying a higher interest rate, especially in this market. So rates will stay around for loan modifications 2.5%. You can't beat that. If you're refinancing or you're doing a purchase, interest rates should remain around 3.5% to 4%. If you can, the best way to buy a home right about now is on a 15-year term, in which your interest rate should be around 3.25. Now that gives a lot of room, gives the person a lot of room to be able to pay off that mortgage, and that's what you want to do. The whole idea of having a mortgage is not to use it as an ATM, the home that is, to use it as an ATM, but to be able to secure a mortgage that's affordable and to pay the mortgage off and to enjoy home ownership without the debt.
We've got Frank Savolta with us today from the New Media Journal, and also Gail Allen. She is with us today from the website newviberadio.com, nuviberadio.com. She hosts a great radio broadcast each and every Saturday, 10:30 a.m. Eastern over there. And I've been talking about loans and the mortgage world. Frank, what did you think of Bernanke and all the various things that happened the other day?
Well, I'm not a giant fan of the Fed, only because it's a private entity that gets to control how government deals with money. But we have to be very careful at the point we are in history right now, especially economic history, because we are not out of the woods by a long shot. Any wrong move with how we deal with our national finances could see us go right back into where we were 2 years ago. So baby steps is a good thing, and until the employment sector starts getting some confidence back to where you see businesses expanding and starting to hire a little bit more, we're going to be taking baby steps. When there is uncertainty, when business owners and corporations, who always have to look out for the bottom line of their shareholders, when they are uncertain about the future, things move very, very slowly as far as employment's concerned. So when that happens, the reins have to be pulled back on gigantic economic steps. It's just basic economics.
Now, Gail, as we wrap up here with you, my friend, tell us how we can get a hold of you and how we can find you online.
Okay. Well, first of all, you can reach me right away. My cell phone is my running office right now. It's 201-397-6941. That's 201-397-6941. You can find me online at GailAllenshouse.wordpress.com. And that's GailAllen, GailAllenshouse.wordpress.com. You may also email me at GailAllenStudio@hotmail.com. And on our website, James, you can fill in information about your situation. If you're down on your mortgage or you feel that you're facing imminent default, you may actually miss a payment because you're very tight. We'll look at your information. We'll send you out a form to complete. If we believe that we'll be able to guide and help you, we will do so. And by the way, our services are very reasonable, $575. That's all we charge. We never charge for the loan modification. It is our belief that loan modification should be given freely from the banks. So what we do is we charge only for the preparation of a file, $575.
Good stuff, Gail.
I can be reached at 201-397-6941. I thank you so much. Frank, I really enjoyed you, and James, thank you so much for allowing us to come on your show and deliver our message.
Yes, indeed. Well, Frank, hold on just a second. We're going to take a quick little time out here. But, Gail, thanks for being on with us today. I really do appreciate it.
All right. God bless.
Appreciate it. We're going to take a quick time out here. It's your Malcolm Out Loud Minute of the Day. When we get back, we'll wrap it up with Frank Savolto from the New Media Journal here on the Big Broadcast.
Out Loud Minute. The Out Loud Minute.
Contrary to everything you were taught as a kid, there are advantages to being selfish. It's a Bring Thinking Monday with Malcolm Out Loud. As a youngster, you might have been punished for not sharing. As an adult, it may actually pay dividends. Well, there's a common thread amongst highly successful people. They all guard their time. You've got to keep control of your time, says Warren Buffett. You can't let people set your agenda in life. As Reddit CEO Ishin Wang explains, time is limited in 3 ways. It's highly limited. We're immature in our first decades and declining in health in our last. It's uniquely limited. You can't bank, transfer, or recover time. And it's equitably limited. Americans can, on average, expect to live about 77 years. Well, look at it this way. There are few overnight successes and many up-all-night successes. The time is not when or how, it's now. And I'll see you back at malcolmaloud.tv.
And Frank, tell us about what we have coming up in regards to Syria this next week.
Boy, you know, this is an interesting little story that just keeps getting. It's like a movie that just has twists and turns and everything else. After Bashar Assad's interview last night on Fox, I think the world has come to understand that he's a grand manipulator and he doesn't really like to tell the truth. Something that was said last night that I caught when I was listening to this that even Charles Krauthammer didn't catch was that in the beginning of the interview, he said he hadn't read the UN report yet. And when queried by the questioner about, well, you know, the report says that missiles, the trajectory goes back to where in the area of the headquarters for your Syrian Revolutionary Guard. And he said, oh, the report says this? And the questioner said, yes. He goes, no, the Revolutionary Guard's never mentioned in the report. Nobody asked, how do you know?